Guys, welcome back to my channel Trade with Fin. So today we will analyze the fundamental analysis of the DMART stock. So let's get started. So let's first talk about the capitalization of DMART. So DMART boasts a substantial market capitalization of 2,59,538 crores, a reflection of its significant presence and investors' confidence in the market. Second, if we talk about the current stock price, so the current stock price for DMart is 3,988. This figure is pivotal for investors, serving as a baseline for market entry or exit decision. Third, regarding the high and low prices of DMart, DMart stocks has experienced fluctuation with a high of 4,229 and a low of 3,292. Fourth, if we talk about the stock's price to earning ratio, that is PE ratio, the stock PE ratio stands at 111, indicating a relative high valuation. Investors should evaluate whether this ratio aligns with industry norms and the company's growth potential. Fifth, book value. DMart's book value is 268 rupees. This metric represents the company's net asset value per share, providing insights into the intrinsic value of each share. Sixth, dividend yield. The dividend yield for DMart is currently 0%. Investors seeking income should note that the absence of dividend payouts and consider the company's reinvestment strategies. Seventh, return on capital employed. DMart boasts a solid return on capital employed (ROCE) of 20.1%. This indicates the company's efficiency in generating profit from its capital investments. 8. Return on equity (ROE). The return on equity for DMart is 16%, reflecting a company's ability to generate returns for its shareholder. Ninth is face value. The face value of DMart's stock is 10 rupees, representing the nominal value of share as stated by the company. So let's talk about the pros and cons of the company. So we'll explore some of the key strengths and positive aspects of DMart stock that make it an attractive investment. These factors contribute to the company's solid financial position and growth potential. Debt-free status. Company is almost debt-free. One of the significant strengths of DMart is its almost debt-free status. This financial characteristic enhances the company's stability and reduces financial risk. With minimal debt obligation, DMart is well positioned to allocate resources for growth initiatives, dividends, and strategic investments. Second, company has delivered good profit growth of 24.5% CAGR over the last 5 years. DMart has demonstrated a remarkable profit growth trajectory, achieving a compound annual growth of 24.5% over the last 5 years. This consistent and robust profit expansion underscores the effectiveness of the company's business strategies, operational efficiency, and its ability to capitalize on market opportunities. Third is company's median sales growth is 33.1% of last 10 years. A key indicator of DMart's market presence and resilience is its median sales growth of 33.1% over the last 10 years. This sustained growth in sales reflects the company's ability to adapt to market dynamics, meet consumers' demand, and expand its market share. Such a positive sales trajectory indicates a healthy and competitive business. In conclusion to the pros, DMart exhibits several strengths that make it an appealing investment option. The company's debt-free status, impressive profit growth, and consistently sales growth performance contribute to its overall financial health and potential for sustained success in the market. Investors may find DMart to be a compelling choice based on these favorable factors. Next, we'll talk about the some of the few cons of DMART. While DMART exhibits strength, it's essential to consider potential concerns that investors should be aware of. Today, we will deal with some of the key drawbacks associated with DMART stock. So, first one is stock is trading at the 14 point times its book value. One notable concern with DMART is its elevated price to book ratio, currently standing at 14.9 times its book value. This implies that the market values the company significantly higher than its net asset value. Such a high price to book ratio may suggest a level of market speculation or high growth expectations, potentially leading to increased volatility in the stock. Second, though the company is reporting repeated profits, it is not paying out dividend. So the absence of dividend payouts. Despite reporting repeated profits, DMART has not been paying out dividends. This absence of dividend payouts may be a concern for income-focused investors who typically seek return in the form of dividends. But the decision not to distribute profits as dividends might be attributed to the company's strategic choices or investment plans. But it is essential for investors seeking income streams to consider this aspect. Third, if you talk about the third con of the DMART, the company has a low return on equity of 12.6% over the last 3 years. Over the last 3 years, DMART has reported a relative low return on equity of 12.6%. ROE is a key metric reflecting a company's efficiency in utilizing shareholders' equity to generate profit. A lower ROE could indicate challenges in generating optimal returns on invested capital, which may be a concern for investors expecting higher returns. While DMART has a notable strength, it's crucial to be aware of certain drawbacks associated with the stock. The high price to book ratio, absence of dividend payouts despite consistent profits, and a comparative low return on equity should be considered by investors when making investment decisions. A comprehensive understanding of both the pros and cons will enable the investor to make a well-informed choices based on their investment objectives and risk tolerance. So here are the few peer comparisons of the DMART. The first one is Trent. Second is Vedanta Fashions, which is also called as Manyavar. Third, MedPlus Health, Electronic Smart, Red Tape, Ethos Limited. These are the few peer comparisons of DMART. Let's now talk about the profit and loss of DMART stock. Examine key financial indicators from March 2012 to the latest 12 months. This analysis will provide insights into the company's revenue, expenses, and profitability over the years. If we talk about the sales revenue, DMART sales revenue has experienced significant growth over the last few years, rising it from 2,209 to March 2012 to 46,653 crores in March 2023. This robust upward trends reflects the company's ability to expand its top line consistently. Operating profit and margin OPM percent. The operating profit has been a steady increase, reaching to 3,777 crores in March 2023. The operating profit margin has consistently been around 8%, indicating efficient cost management and sustained profitability. Other income, other income which includes non-profiting sources has shown variations but remained a positive contributor in the TTM period. It stands at 140 crores. Profit before tax. DMART's profit before tax has grown substantially, reaching 3,186 crores in March 2023. This reflects the company's ability to generate profit from its operation before accounting for taxes. Net profit and earning per share. Net profit has been remarkable growth, reaching 2,332 crores in March 2023, and EPS earning per share has followed, increasing from 1 rupees 1.13 in March 2012 to 35.90 in March 2023. Dividend payout Dividend payout has been consistently at 0%, indicating that the company has not distributed profits as dividend, opting for reinvestment or other strategies. So if we conclude the profit and loss statement, DMART's profit and loss statements illustrates a strong financial performance marked by consistent revenue growth, effective cost management, and sustainable bottom line expansion. The company's focus on profitability and reinvestment is evident in the dividend payout of 0%. Investors should consider these financial indicators alongside other factors when making investment decisions. Let's now talk about the balance sheet. The balance sheet of DMART examines key financial indicators from March 2012 to September 2023. The balance sheet provides insight into company's financial health, showcasing its assets, liabilities, and equity over the years. Equity capital and reserves. DMART's equity capital has seen a steady rise from 534 in March 2012 to 651 in September 23. Concurrently, reserves have witnessed a substantial growth, escalating from 148 in March 12 to 16,779 in March 23, indicating the company's retained earnings and financial strength. Borrowing and other liabilities, borrowings fluctuated over the years, reaching a peak at 1497 in March 2017 and stabilizing in at 630 in September 23. Other liabilities also demonstrated an upward trend, reflecting increased financial commitments and operational activities. The total liability comprising equity capital, reserves, borrowing, and other liabilities exhibited a progressive climb, reaching 19,587 in March 23, underscoring the company's expanding financial obligation. Assets composition, DMART's fixed asset, including property and equipment, expanded significantly from 779 in March 2012 to 12,000 in September 23. Other assets conclude the DMART's balance sheet, which portrays a robust financial position marked by steady equity growth, prudent reserves management, and strategic asset allocation. The detailed analysis of the balance sheet provides valuable insights for investors and stakeholders, aiding in a comprehensive understanding of DMART's financial trajectory. So now let's talk about the DMART stock cash flow overview. We'll now explore the cash flow activities of DMART, focusing on cash from operating, investing, and financing activity from periods spanning to 2012 to 23. Cash from operating activity. DMART's cash from operating activity demonstrated consistent growth, escalating from 65 in 2012 to 2,630 in March 23. So this positive trend signifies the company's ability to generate cash. Uh, so net cash, if you talk about the net flow derived from the sum of the operating, investing, and financing activities, showcase the overall cash movement. DMART exhibited a positive net cash flow, indicating a healthy overall cash position and operational efficiency. Let's now talk about the shareholding pattern in DMART. Understanding the shareholding pattern of DMART provides insights into the ownership distribution among various investor categories. Let's explore the changes in DMART's shareholding pattern from December 2020 to this September 23. So the promoters holding, DMART has maintained a stable promoter holding throughout the observed period, consistently at 74.99%. This indicates the strong commitment from the promoters holding, reflecting confidence in the company's long-term prospects. FIS, foreign institutional investors, the FIS holdings in DMART experienced a gradual decline from 10.09% in December 2020 to 7.67% in September 23. This shift suggests a changing sentiment among foreign institutional investors regarding DMART stocks. Domestic institutional investor DIS have shown a slight increase in their stake, growing from 6.71% in December 2020 to 8.25 in September 2023. This upsticks may indicate a growing interest and confidence from domestic institutional investors. If you talk about the government holdings, while minimal government holding has been a marginal increase from 0% to 0.4% by September 23, government involvement, though limited, adds another layer to the diverse ownership structures. Public shareholder pattern has seen a fluctuation but remained within a narrow range, uh, hovering around 8% to 9.5% as of September 2023. The public holds 9.4% of DMART shares. The stability in public holdings suggests consistent interest from retail investors. Number of shareholders, public the number of DMART shareholder has steadily increased over the time, reaching to 8 lakhs 15,562 as of September 23. This growth signifies a widening investor base and enhanced liquidity in the market for DMART shares. So, I would like to conclude that before making any investment decision, it's crucial to conduct a thorough analysis of DMART financial statements, competitive position, industry trends, and future growth prospectus. Additionally, consider your own investment goal, risk tolerance, and the broader economic environment. It is recommended to consult with financial advisors and conduct detailed research or analysis to make an informed decision based on your specific finance objective and risk tolerance. The information provided in this video serves as a snapshot of certain aspects and should not be sole basis for investment decision. If you like this video, please like and subscribe my channel Trade with Sim. Thank you.